Decades ago, small American towns operated as busy economic engines, where local labor and commerce were contained within a few square miles. Many of these communities are now defined by vacant hotels and obsolete office buildings, zombie commercial assets that sit idle while draining the local tax base. These empty shells represent an untapped market inefficiency. These tax-draining liabilities are hidden economic engines, often overlooked by traditional investment models that prioritize newer markets. Reversing small-town collapse depends on a specialized framework designed to reposition these specific existing liabilities into high-yield assets. This decline was predictable. It began when manufacturing, farming, and resource extraction automated or consolidated, causing the labor-intensive jobs that sustain these towns to vanish. The construction of the Interstate Highway furthered this isolation by bypassing regional hubs, starving Main Street economies of the traffic and commerce they relied on. Economic isolation triggered a demographic flight as younger generations left for urban job centers. This erosion of the tax base led to the collapse of schools and emergency services, creating medical deserts as rural hospitals were forced to close. Corporate consolidation compounded the issue. As national retailers replaced independent businesses, local profits began flowing out to distant corporate headquarters, leaving towns commercially hollowed out. This systemic abandonment created the massive, undervalued inventory of zombie real estate currently sitting on town ledgers. Traditional commercial brokerage often struggles here. Commission-biased structures encourage short-term exits that generate fees, but rarely support a town's long-term viability. Instead, PRI Consulting utilizes a fiduciary-first, fee-based retainer model, aligning the advisor's incentives with the long-term investment goals of the client and community. This objective advisory structure enables honest feasibility studies. The firm can identify and move on from projects that are structurally harmful to the town, ensuring resources are only deployed towards sustainable, value-add developments. Regional revitalization requires an advisor whose financial success is tied to the asset's longevity and the town's survival. The framework begins with an audit focused on a property's underlying infrastructure, rather than its current aesthetic state. The goal is to identify assets with heavy energy grid connectivity. These properties possess the raw utility power necessary for modern, energy-intensive industrial applications. The framework also identifies land-heavy assets on the town's periphery for industrial outdoor storage. Repurposing these sites to support regional supply chains brings consistent industrial activity back to the area. The latent value of a zombie property resides in its physical capacity to integrate into modern, heavy-duty industrial and energy networks. Adaptive reuse realigns an obsolete property's function to meet immediate community needs. For example, the framework repurposes a vacant hotel into essential workforce housing. This fills a critical community gap while stabilizing revenue for the investor. This repositioning achieves operational optimization. By shifting the property to its highest and best use, the asset becomes a stable anchor for broader regional growth. Solving a town's housing shortage through adaptive reuse creates a path to secure, stabilized yields for the investor. Local revitalization efforts often fail when they attempt to rebuild isolated economies that are no longer supported by current market conditions. PRI uses platforms like Midnight Ledger and PRI's Perspective to incorporate national macroeconomic analysis into local, single-building decision-making. Positioning capital in alignment with these larger regional shifts provides a tailwind, improving the likelihood that a repositioned asset remains relevant within the evolving economic landscape. Revitalization relies on rigorous, forward-looking macroeconomic alignment. Fiduciary alignment combined with adaptive reuse and macroeconomic intelligence provides a method for reversing small-town decline. Obsolete inventory and economic isolation are the raw materials for a significant market opportunity. The PRI Consulting framework demonstrates that addressing the small town's infrastructure crisis creates a path towards sustainable, high-yield investment returns.